Hi, this is Patrick Heffernan, practice manager and principal analyst at Technology Business Research. And I've got a couple of my colleagues here today, Brian.Baker and John.Caucis, to talk about what's happening in this time of the pandemic to the federal sector IT services players. So I'm going to ask them a few questions and get their thoughts on it. First, with the earnings season coming soon for all the vendors that you cover, what are you expecting with respect to guidance? We know that Accenture just recently cut their guidance in half for 2020. So do we expect the same from the federal sector IT services giants?
Yeah, Patrick, this is John.Caucis. We've already seen one contractor, one federal IT contractor, Maximus. I believe on March 25th, they elected to suspend their financial guidance for the current fiscal year, citing difficulty in predicting the full impact of COVID-19 on their growth, on their income and cash flow, though they did kind of intimate that they expect to see erosion across all of at least those three metric areas. So they became essentially the first federal contractor to do so. That same week, we also noted announcements from Northrop Grumman and General Dynamics. General Dynamics and Northrop released amended and updated 8K filings with the SEC that were updated with assessments, very brief, but still assessments of the potential negative impact of the coronavirus on their operations. They did so by expanding the list of risk factors to include everything that they apparently could think of with respect to COVID-19. Far-reaching, extending beyond company fiscal health to include issues in the resource management arena, including diminished employee productivity and contract performance, supply chain disruptions, the increased cost of and diminished availability of investment capital, the potential temporary suspension of operations at customer facilities or work sites, and overall reduced demand for their products and services that may result and may extend in a protracted period if there is an economic downturn here in the U.S. Or abroad. And these contractors and others issuing similarly cautionary remarks have also noted that right now it's too early to really predict the full impact of COVID-19 on their business or the industry. What TBR sees, having observed all of this, some additional near-term challenges in the form of pressure on their procurement functions, purchasing delays, deferred starts, and consequently deferred revenue recognition, recent awards, the entire procurement cycle shifting to the right, project execution perhaps being delayed as they contend with how to adjust to the new normal of a predominantly telework kind of environment. Travel bans and restrictions will further impact project delivery, impeding business development. It's not always the case, but it's very often the case that the vendors send their business development teams, which may or may not even include their senior executives, to client sites to meet with the brass at their clients, when they are in the final stages of working out a new contract, when they're in final stages of pitching a new contract to their clients. So these are all things that are also going to be impacted. Now, when we look ahead to the upcoming earnings season, which begins roughly the third week of this month, third week of April, we expect that Maximus is not going to be the last and not the only company to either amend their guidance or forego providing guidance altogether. We see this shaping up to be a common thread across their peers, and it'll feature prominently in the upcoming earnings season. So we don't think it's out of the question that many vendors could have to trim their guidance in half, though the full impact may not really be felt until the following fiscal year, federal fiscal 21. The deliberations, though, will be a bellwether as to how that is going to play out, fiscal 21 and 22. So keep an eye on that going forward. Brian, do you have anything additional to add at this point?
Just add, I agree with your assessment so far. I also add that SAIC released pretty recently, and they kept their guidance the same, which to me is basically saying that they're foregoing guidance in a different way, because functionally that guidance is not useful at all in this new post-COVID world. So I'd be interested to see if other vendors kind of take that tactic as well, to just kind of keep their forecast the same and say they don't know how to assess the impact yet.
Yeah, that's a really good point, Brian. And we're looking at that on the commercial side as well for the commercial IT services vendors and sort of looking at the spectrum of how they handle guidance. And John, I'm glad you brought up the sales motions, because that's something else we're expecting to see change with respect to the commercial sector, the commercial focused IT services vendors. We think the emphasis will be on client retention through the pandemic and through this economic downturn. So our federal IT services vendors, are they going to be focused on client retention in the same way?
Yeah, and then some. I think that there's additional qualifiers around that. We're already halfway through federal fiscal 2020, and a large portion of the spending commitments have already been made. Many of the vendors, especially the folks upstream like Leidos, they've got large scale engagements that they signed in previous fiscal periods, and they're carrying forward through this. So those monies are going to continue to flow, and there are some recompetes that Leidos does have, other vendors have, and the process for differentiating and winning those recompetes may be more onerous than it has been in prior years, prior quarters. So from that perspective, we may see a more difficult, a more challenging effort in terms of client retention. But as I mentioned, a lot of the budgetary commitments have already been made, at least through the end of the current federal fiscal year, which ends September 30th, of course. I think beyond that, the market is most certainly going to get more competitive in the next fiscal year and in fiscal 2022. And don't be surprised at all to see a resurgence, a resurrection, if you will, of the much maligned, low price, technically acceptable LPTA purchasing. That may reemerge in federal procurement. It's something that we saw several years ago, during leaner budget years. But this is something that we may start to hear again in the federal appropriations processes. A couple of other challenges that we may see. It's going to be more challenging, I think, for the federal IT contractors to secure operating credit. Cash is really king in federal IT, and they may find challenges obtaining the capital or obtaining it at a reasonable cost over the next year or so. This in turn may make it not only more difficult and more costly to obtain operating capital to kind of buffer the impact on their cash flow to the of COVID-19, but also this may also depress what has been a fairly red hot M&A market in federal IT over the last couple of years, highlighted by a significant number of large scale strategic mergers. Internally, I think federal IT contractors are going to have to focus on learning and implementing new resource management models. I mentioned telework before. I think that's going to take center stage. Coaching their agency clients on doing the same. I think that there's more of a cultural acceptance and more telework actually happening within these companies than within the agencies that they serve. So they may be called upon for best practices with respect to shifting to a predominantly telework kind of environment. In terms of procurement, certainly the focus, this is an opportunity, I think, for federal IT vendors to take a sharper look at how they differentiate themselves and a sharper look at how they communicate those differentiators to the market. Brian, anything else to add?
Yeah, so sort of to go along with, the spending commitments have been made. It's also going to be interesting to see, just saw this morning, Perspecta was awarded another extension to Engine, NGEN, to help can continue the transition work for the end user hardware portion of the new deal as it transitions to HPE. So new big awards like that, where the incumbent was unseated recently, I think may be pushed to the right also, where the incumbent just has to stay on for even longer. So it might be some opportunity for companies like Perspective that recently lost recompetes to sort of capture a little bit of more business on their old contracts and maybe show that they're able to do it a little bit better than the new companies that took it away from them.
So Brian, you sort of opened it up here. So I know that a lot of the research focuses on not just the big trends that we've been talking about, but the individual vendors and what they're doing. So for both of you, which are the vendors that you're most intent on watching even more closely now? And what do you sort of expect in terms of the near term during this pandemic and then after that?
Well, Patrick, I'll mention three, and they're the leaders in our public sector IT services benchmark. We have a very heavy federally centric focus in that research program. So these guys and their peers in federal IT are the ones that we generally track. But the three leaders in terms of overall fiscal performance, growth and profitability, market diversification, services diversification as well. The three being Leidos, Raytheon, and Booz Allen Hamilton. Leidos has really become king of the hill in terms of their size. They've got a market capitalization right now north of $15 billion. They've got large revenue bases in the defense sector, which may be insulated initially from the disruption of COVID-19, but perhaps not so much from the disruption to the supply chains providing technologies, especially hardware, to the defense sector. But Leidos does have a large revenue base in defense. They also have a large revenue base in healthcare. Both of these sectors have delivered strong growth, strong profitability, strong profitable growth to Leidos over the last year or two. And particularly in the health segment, I think Leidos is very, very strongly positioned. You can start with their, it's a power trio. They and Accenture Federal Services and Cerner doing the integration and the implementation of the MHS Genesis electronic health record system. It starts there, but with Leidos, it extends beyond that. They have strong positions with the CDC, with the National Institutes for Health, with the Defense Health Agency, strong partnerships. I've already mentioned Accenture and Cerner. They've been very active. I have started taking a look at their activities during the first calendar quarter, which of course wrapped up earlier this week. And I'm just seeing the continuation of activities and developments that underscore how Leidos has really established healthcare as a strategic growth opportunity. Now, in the wake of COVID-19, the opportunities that I see Leidos being able to capitalize upon are, and there may be some shift in the federal budget from defense to healthcare areas, but that's because of the areas in federal healthcare and perhaps in the certainly in the commercial side as well that have been kind of exposed. COVID-19 is really going to bring to light, where public health agencies, for example, where their readiness in terms of technology-enabled readiness, where it has fallen short. They're going to have to do a very careful self-assessment, and new spending priorities may emerge from that, so that they are ready for the next potential outbreak or for a resurgence, hopefully not, of COVID-19. But a couple other points on Leidos. They've made some acquisitions as of late to $2.5 billion in acquired revenue from Dynetics and from the business that they purchased that was carved off of L3Harris. So they're very well positioned. In fact, I saw yesterday kind of a humorous article that referred to Leidos as it was the street. The street was calling Leidos the Terminator because they feel as though Leidos has strength in so many areas of their fiscal and operating performance in their portfolio that they could be the vendor to really lead the market out of the trough of COVID-19. So let me shift over to Raytheon then, another very large vendor, but I'm concerned, more concerned with Raytheon about the negative impact of COVID-19 on the aerospace sector, which they, with their merger, which was just approved earlier this week, and I believe that the new Raytheon, the new company is going, the new moniker at least will be Raytheon Technologies. They're going to start trading today on the New York Stock Exchange. So it's going to be interesting to see how they deal with the impact, the effect of COVID-19 on the aerospace sector. They obtained a significant, their exposure to the aerospace sector really expanded significantly with the merger with UT. There's a lot of opportunity there downstream, but they were, of course, expecting to be able to start capitalizing on that immediately. So how they manage that is going to be very interesting to follow. But they still have strong positions in the classified market, cybersecurity, the space segment. Their international business is growing. Very, very well established in the U.S. and defense intelligence markets. They have a lot of what would be considered essential services. They have positions on a lot of contracts that are going to be ongoing, irrespective of COVID-19. So I think in some respects, Raytheon will be able to deflect some of the headwinds that I mentioned. And then finally, Booz Allen Hamilton. They've got one of the largest footprints in the intelligence community once again. This then positions them with a lot of these contracts that are considered to be essential and must continue irrespective of pandemics. And so they'll be kind of a bellwether on the impact of COVID-19, at least on the intelligence community. Their legacy and advisory also, I think, positions them well. When the disruption is behind us, federal agencies are going to be looking for guidance as to how to organization change and management, for example. And Booz Allen has been making investments there. They've won some contracts there. They have solutions there. They have analytics that I think can be brought to bear on organization change and management for federal agencies. So there's somebody else to keep an eye on. So Brian, anything else to add?
I would echo all your thoughts on the leaders there. I'll come at it from another angle. I'm worrying about SAIC and their integration of Unisys Federal, which is just getting underway. I think the challenges of integrating a company of that size might have been difficult for SAIC in a normal environment, and in this COVID-19 situation where everyone is working remote and there's not really able to be that person-to-person contact, I think that could cause some significant resource management hurdles for SAIC going forward. I also have a little bit of a worry about Leidos in terms of their integrations as well, but I think they're just better organizationally suited to handle something like that. Whereas SAIC, I'm concerned, especially in the wake of Agility as well, which is just past the 1 year mark. So I'm not sure that the challenges associated with that integration are all done either.
Brian, I think that actually points to one of the things that we're focused on the broader IT services sector, and that's sort of, because you mentioned like Agility, and it's been a year, coming up on a year anniversary of that. It's a leadership challenge above and beyond everything else. The ability to work remotely, the ability to deliver remotely, the ability to handle your talent during this time of crisis, the ability to make sure your clients understand where you're at and what can be done for them, and sort of hold their hands. And John, you mentioned advisory in Booz Allen Hamilton, and consultants love chaos and confusion. It's great for the consulting business. But I want to wrap up with one sort of big question. Maybe we should have started with this, but what is, when you think about the entire landscape for these vendors, not the individual problems each of them are going to have, or not sort of just surviving through the team, but what is the biggest concern that all of them are going to be facing? Again, other than surviving COVID-19 and other people, John, what do you think is the number one thing that all of them are going to face?
I think that there's a number of different factors that are competing for that top that top slot. Certainly, the disruption to their supply chains, global supply chains, especially on the product side. Many of these vendors. Well, let me back up. A couple of vendors come to mind immediately, and Leidos amongst them. They've been pivoting towards, and Northrop Grumman as well, pivoting towards becoming more product focused. Now, the disruption to global supply chains is certainly going to impact them. And then how are they going to pivot perhaps to new and untested supply chains will be a principal challenge in the near term. But even, I think perhaps even almost at an equal level of concern will be the capital constraints that I mentioned a few moments ago, lingering impediment to their fiscal management strategies. The longer-term impact of a prolonged economic downturn on budgets and budgets not only here in the federal space but also overseas. Leidos has been actively expanding its international footprint. Raytheon has a large international footprint. CACI has been looking more intently at the UK market. There's opportunities for them to parlay the solutions in cybersecurity and national defense that they have cut their teeth on here, parlay that into new growth streams and profit streams overseas, and that could be impacted as well. So I don't think there's one single concern. There are a number of concerns. It's multifaceted, and they're looking ahead, I think, with an elevated level of concern at the deliberations, the upcoming deliberations for federal fiscal budget 21 and 22. What the budget proposals are going to look like. How the long-term budget goals in the federal space may shift significantly. I mentioned earlier the impact on the health segment. Well, there may in fact be a shift from defense to spending to favor domestic health spending to address the shortcomings that COVID-19 exposed in agency readiness. Companies are going to have to, I think it's inevitable that they're going to have to amend their 2, 3, and 5-year strategic plans and maybe engage in almost a full reset as COVID-19 plays out and in the wake of COVID-19.
And Brian, any other thoughts on that one?
I'd also add in the short term, I think the security of the ongoing work is going to be a major concern as a lot of it shifts to remote. A lot of these vendors may not be as prepared and as secure as, the government would need them to be. So I haven't seen anything yet, but I'd be interested to see soon if there's any sort of breaches or any other issues with the security as remote work becomes the new normal.
Right, and I think the opportunity for vendors that provide security services, from consulting all the way through managed security services, I think is going to go off the charts, because this demand for work from home is simply going to, or I shouldn't say just work from home, remote work is going to cause a huge upheaval with respect to security. And I think, John, when you mentioned sort of the resetting the 3 to 5 year outlooks, I think one thing that we saw earlier this week or last week was the CEO, the head of Unilever, talking about the need right now to focus on operational supply chain issues, to, it's all tactics right now, tactics and people, and that the longer term vision needs to wait. And I think it's important to think about the way that companies are operating now under that mindset, but realize that when we get through this pandemic and out the other side, everyone's going to have to rethink exactly what 3 to 5 years looks like, because it doesn't look anything like it did just 3 weeks ago. So it's really crazy. Gentlemen, thank you very much. And for the folks that are listening to this, if you have any questions, you have our contact information, reach out and we can talk about it. And of course, John and Brian are going to continue cranking out their analysis around the federal sector IT market. And we're, as a firm, TBR, will continue cranking out our research around everything that happens in the technology space. Thanks, guys.
Thank you.
Thank you.